Hello and welcome. This is the FNO Show. I'm Agam Vakil, and in this show we talk to you about all that is happening in the futures and options space in Indian equity markets. It does seem like we're looking at the second straight day of weakness. With that, let's get in our experts for today. We have Kush Bora of kushbora.com and Ajit Mishra of Religare Broking, who's joining us on the show. Good morning to both of you. Thanks for joining in. Kush, I come to you as far as the Nifty is concerned in the near term. Ajit, what is your assessment on this benchmark?
Yeah, good morning, Agam. So, Agam, it's been almost 3 weeks of successive up move. So, we are seeing profit taking, after this strong move. And yesterday it was like, the index heavyweights, especially Reliance, DSC, ICICI, they were weighing on the sentiment. And today we are seeing more broad-based selling. So, yes, the tone looks, negative to us for the intraday. Positionally, I feel that's going to be more of consolidation. Means we still have a support at around 25,550 on the Nifty, which is the 20 EMA on the daily chart. So that is likely to be held. And but yes, when it comes to intraday, I feel that not at the current level because we have seen a decent cut from the recent highs, and the intraday rebound is also completely fizzled out. So in case if we get any bounce again around 25,800, 850 level, then it's a good shot with 950 being the stop, and for the positional target of 25,550.
So interesting calls coming from both our experts, and at the moment it does seem like the tilt is towards the downside. But what about the Bank Nifty? I reckon this is moving in tandem with the Nifty. Ajit, your assessment first.
So yes, Akam, in fact, what we were discussing about the private banking majors, SDFC, ICICI, they are leading the decline, and we are now very closer to this 20 EMA on the daily chart around 52,700 mark. So that is going to be critical since we have this BP expiry also. So how it's going to behave around 20 EMA, that would dictate the trend from here on. So as of now, I feel that comparatively it looks better because we have support nearby. But overall, still we have room of further downside, especially in some of these private banking majors. So it might continue to trade lackluster at least in the near future, but it's likely to outperform Nifty. So for a time being now, it's an avoid for any fresh position. But if you have any existing trade, 52,700 should be your strict stop.
Okay. Well.
Yeah, and so considering the market tone, I feel that one should place their trade on both sides of the market. And chemical and fertilizer is something which is gaining traction today. And one such name wherein we have cushion because we have strong consolidation of it is GNSC. The stock is putting around 690.93 zone. So here, after this consolidation, we are anticipating a gradual recovery with first, pause around 720 marks. So that should be our target area. With stop at 684, one can go long in GNFC at current levels.
All right.
For shorting trade, LIC Housing Finance has been struggling after this, sharp decline. We've been seeing narrow range consolidation, and now it seems like a formation of a short pivot on the daily chart, which may push the stock further lower towards 645 in the near term. So with stop at 670, one can go short in LIC at current levels.
All right. Well, I just want to discuss maybe one or two stocks before if we can start taking queries as well. And in today's day of trade, I reckon that it would be pertinent to mark out, Reliance Industries right now. Because we're clearly seeing some weakness. Reliance Industries is one of those stocks which is perhaps harder to trade, only simply because of the fact that there's just so many hands. And, while you may have one very large hand or a couple of very large hands who may have a bullish view, on the other hand, on the counter, you may have a handful of very large hands who may have a bearish view, which is why it's always hard to find a trend in relatively larger names like Reliance Industries. That said, it doesn't mean that you don't have trends at all. And there are certainly certain levels that I'm sure these stocks adhere to. Ajit, let me take up Reliance with you. How would you trade this one at this point in time?
So Agam, we made a new high in Reliance in the month of July, and post that move, we saw that again there was a bit of a profit taking which pushed the stock again in the consolidation range. It's almost nearly 2 months now that we've been hovering in this band, tight band 2900 to 3050. So of late we've registered the upper band, and again we are drifting lower towards the lower band, close to around 2900 mark. So keeping this consolidation range in mind, plus we have strong support of 200 EMA placed around 2860. So all these factors indicate that around 2900 zone again we might see the stock witnessing some buying interest. So for current levels, one should wait, let it retrace closer to the lower band, and then initiate fresh longs with 2850 being the stop. Again, for the upper band, there is a positional target which is around 3050.
Right. Well, I think that it is so a potential loss at the moment. Ajit, the question is, should the viewer hold on to this specific call option or book profit here?
I would certainly recommend come to book profit because, considering that, yes, we are not seeing any major damage in the IT setup, but they are not participating also, in the recent rebound that post-Accenture guidance, we saw an uptick, for the early hours, and by the end of the day, majority of the gains were surrendered. So I feel that's likely to consolidate in the range, and for TCS particularly, it's looking comparatively weaker if I compare it with HCL Technologies or Infosys. So I feel that if you are planning any fresh trade, stick with the top two names, Infosys and HCL Tech, at least in the short term, and prefer in the money or at the money. Don't go beyond 200, 300 points like the case that you have in TCS. So in this scenario, definitely it's an exit. You can book profits. For TCS now, the next support comes around 4200. So around that area, it might again witness some bounce or recovery ahead.
All right. Just a word out here, because even if you actually buy an at the money option, you do still have the opportunity to make returns which are exponential. And sure, we all get the enticement that is when you in fact buy an out of the money call, but if you buy a further out of the money call, there is always that chance that time value could potentially eat up before you actually see that gamma play out in your favor, and more often than not, it becomes a often difficult situation to trade in, and that's always the challenge when it comes to buying options, because time always isn't in your favor, and which is why it's always helpful that if you are in fact positive on a certain option, you can always buy at the money options or just slightly out of the money options, maybe not too far out of the money options, because there's always that risk that would eventually land up worthless, even if you have the direction in your favor as far as that particular stock is concerned and that particular option is concerned. But on that note, I'm going to take a moment to thank both our experts for joining us while taking us through their views on the markets, giving us your trading ideas, and of course solving a handful of your queries. But from there on, let's also shift focus to the commodity space, and plenty